The Bank of Canada held the key interest rate to 5%, but why? In this video, we're gonna discuss some of the economic factors. Then we're gonna break down into what's happening boots on the ground. Are there gonna be a lot of delinquent sales? Are people gonna be foreclosing on properties left, right, and center? Should you wait? Jump in the comments and let me know what you think. Let's get right into the video. If it's your first time to the channel, welcome. This is where people come to get insider information as to what's happening in the real estate market. We tell you how it is. We don't pull any punches. We show you what's actually happening, boots on the ground. We also love profiling off-market properties. If you like looking at real estate or you like real estate at all, hit that subscribe button and then let me know where you're from in the comments. One of my favorite things about the Prime Nation and this community is how it is global. We have been sending referrals out to Florida, New York, Texas, BC. We are always doing business in different places. If you need an agent anywhere on the planet, working on something in Mexico right now, I am your guy. My name is Justin Conoco. I own the company with my amazing wife, Shannon, and we have a team of absolute killers in real estate. We cover everything: residential, commercial, investment, agriculture, and recreational properties. So the focused diversification gives us a balanced perspective. I don't have commission breath. I don't need to sell you a property to be okay. We're gonna keep the lights on because we are diversified. So the advice I'm giving you is the same advice I would give any of my close friends. So welcome to the Prime Nation. So why did they hold the interest rate to 5%? There's a few factors. The US economy is performing better than people thought it would. China's economy is actually slowing down a little bit. Inflation is still looming. It's at 3.8%, and they don't think it's gonna come down overnight. I also feel like they are realizing that cranking the interest rates is only really increasing inflation. And they actually were discussing this yesterday, that it's not gonna fix the housing price problem. And we all know that. If you actually look at the amount of new housing starts that have come offline, 30, 40% in some instances, when interest rates stabilize, and eventually they will stabilize, it is going to be an absolute bloodbath out there. One piece of advice I have been giving sellers calling me saying, hey, should I just pull $1 million equity out of this property and sell it? Is, yeah, you should totally do that and put that cash in the bank. It's gonna be bumpy for, call it 24 months, maybe even longer, but be careful you don't get priced out of the Canadian real estate market. I truly do believe, call it 3 to 5 years down the road, when interest rates stabilize, call it 4.5 to 5%, those are normal rates. We will be in a saving economy. A lot of people will wanna move to Canada, and all of a sudden we won't have any houses being built, and it's going to destroy the housing market and people will be priced out. So what I'm telling people is maybe you need to downsize. You're seeing all kinds of different sellers out there, some that will not be able to refinance at 7% or 8% rates next year and need to be making realistic decisions today. Stop chasing February 2022 prices. Those are not real numbers, and start getting realistic about where the market is today. You have to be ultra sharp with your price points. The second reason why I think they held the interest rate is economic growth in Canada is slow. So they've been cranking the rates, obviously trying to get the prices of goods down, but it's also forcing companies that aren't selling as much to start reducing their staff. You start reducing your staff, there's less people making money that can go out and buy stuff. How do you think this cycle continues? So if they keep hammering on interest rates and Canadian growth keeps dropping, they're gonna need to do something to spur production in Canada. So this has been an indicator that you can tell that they're realizing what they've been doing has not necessarily been working. The two other factors that they're watching very closely are food and energy. So on the food side of things, grocery stores have been making record profits. It blows my mind. Jump in the comments if it blows yours as well. The inflation rate on the grocery side of things still 6%. Starting to stabilize a little bit, and as you see media coverage talking about it, oh, all of a sudden the grocers are coming in and they're gonna help the little guy, right? So hopefully they get that under control, because I think that would actually affect inflation in a tangible way. And my heart goes out to everybody overseas with what's been happening, but the energy costs and what that means for oil, they're watching very closely as well. A little bit more volatile, but I truly think that if you look at what's happening from a GDP and an inflation perspective, it is more actually tied to those assets than the housing market. They have crushed sentiment. We all know that there's more properties on the market. We know houses are taking longer to sell. You're seeing more price reductions. But if you look at the actual statistics, it would actually shock you to see where the data is. Days on market, actual sales volume. I'm gonna cover it all in our next monthly market update. Make sure that you click subscribe so you don't miss that. It is coming out very, very soon. And last but not least, let's talk about what's happening boots on the ground. I gave you a little bit of a preview talking about sellers calling us saying, hey, I might need to sell my house next year. A lot of people think that the market's gonna absolutely crash and people are gonna foreclose left and right. Is that gonna happen on certain properties? Yes. Are there people that are liquid and have cash and don't necessarily care about interest rates? Yes. Investors are actually still taking action. Got into a discussion with a gentleman on TikTok the other day who told me stocks are the best thing to invest in on planet Earth. I invest in the Index 500 and I truly believe stocks are a good investment vehicle. I truly believe you should be diversified. I also truly believe that real estate is my favorite vehicle on the planet, not just because I sell it, because I actually buy it as well. So investors are purchasing things where the deal actually makes sense and the math has to make sense. Let me explain. You make your money when you buy, meaning whether you're buying a residential home, you're buying a commercial plaza, you're buying a land development deal, the deal has to pencil out from day one. You need to plan multiple exits in the deal the day you actually close on it. There's discussions going around about real estate agent buyer commissions. Well, guess what? As a buyer, you're paying their commissions because it's built into the price. There's a fallacy that the seller pays it. No. You're the one buying the house, and the proceeds of funds, sure, comes from the seller's side of the transaction, but it's a cost of doing business. Just like interest rates, just like commissions, just like legal fees, doing research, going to the planning division, spending time, these are all investments you're making into the transaction. So my best piece of advice for anybody looking to invest in a market, looking for opportunities, is understand what's happening from a macro perspective, but do not let it paralyze you from acting in the micro perspective. I actually practice what I preach. We closed on a recent transaction. It took us about 4 months of work. We had to find the opportunity, a lot of heavy lifting, a lot of elbow grease, but the deal makes sense for us and we can hang on to it for as long as we need to. And we have 4 different ways to exit it. We also did 2 deals recently for investors, one in St. Thomas and one in Lucan, that are knockout deals. Did we just run into them and do a deal, no conditions, firm, over asking in day one? No, not in this market. Our due diligence, we probably kill 5 times as many deals as we actually write, but that's because we're just conservative by nature and we want to make sure we're doing good business. But at the same time, we also understand in times like this, more millionaires are made than any other time. So if you want insights into the real estate market, you want to connect with me or the team, maybe you just have a case study or something that sounds a little bit fishy and you just want a second opinion, send me a DM. All my information is in the email below. I connect you with the Prime team. Would love to get you as a member of the Prime Nation and the Prime family. If you enjoyed this, you agree with me, you disagree, just jump in the comments and let me know. It's literally why we do these videos. Thanks for joining us, and I'll see you on the next one.